Good morning, retail traders. I'm Washboardjim with a sneaky snake trading strategy where I love talking about chart patterns, moving averages, and being in the now. And I want to show you a very important strategy that could help you become a much better trader. A lot of people have trouble finding support and resistance levels. I don't use too much technical analysis. I use moving averages, I use chart patterns, and I try to find trend lines. And I've been able to do that for a very long time. They're a lot more accurate than a computer is. But you have different strategies. That's what I love about trading the market. There's so many different strategies. I'm a multi-strategy kind of guy. So today we're going to talk about how to find a pivot point in different time frames. So pivot point are significant levels that for traders and investors to determine what direction the market's going to be moving. You can either tell with a pivot point if we're going to find a support level, or you can tell a pivot point of the break of resistance. Anything above a pivot point is resistance levels, and anything below a pivot point is support levels. And you can play them channels from support to the pivot point. And if it breaks the pivot point, you can use that pivot point as a support and run the stock up to the next levels. And whatever that is, a head and shoulders, a triple top, a double top, a rising wedge, all kinds of bearish flags out there that you can, bear flags. I mean, you can tell that you're bearish by just looking at the pattern. And you can tell if you're bullish or bearish by determining where the pivot point is on a chart. So I'm going to leave this link in the bottom of the video, and you can study this a little bit, but be sure to watch my video, hit the subscribe button and like so you can get my updates. So the resistance to break, that's where I call out the trade where I think the last resistance to break is in the stock, and if it hits it, I usually take a sell, put a sell in it. If it breaks it, I'll wait until it pulls back and hit that resistance level. If it breaks down below that resistance level, I will sell it. So that's talking about right up in here. So if I'm coming up from the pivot point area on the chart, you can see how many times this thing's bounced off that pivot point. And that's called a pivot point channel. So it gives me a little chance in case it does dip, I can still hold it. But you have peaks, and that's a pivot point inside of the channel, if that makes any sense. But anything above that line right there is resistance to the resistance of break, or anything below that line, I'm trying to find an equilibrium in the chart. And I'm going to chart this up for you and show you how I find these lines. Same as down here. This bottom right here is a support channel to this, which means that's a solid support. We've had a double bottom off that support level. I don't use the wicks, I use the bodies. And if the wicks are a confirmation to the bodies of the candle, then I'm a lot stronger to get into that trade. So you can see for almost 20 days, we couldn't break that resistance line. It could be poised to do it real soon. Now I think I've called the bottom on IWM. I've already charted this up, and if you want to go back and look at that video, you'll see how to zoom out when you're charting up charts. It's very important to learn how to zoom out when you're in a downfall or a correction. This correction ain't nothing. For anybody to be worried, we were way overbought in tech. Way overbought. They pumped this so high. They're not going to tell you that, but I'm telling you right now, they were way overbought, and I've been trying to emphasize that to people. Just look at the charts when you zoom out. Oh my God. You'll get the understanding of what is overbought, what is irrational exuberance, and you can wait and get in on them corrections. But I've been spitting this out for a good long time now. So you got to know when we're overbought in a stock. You can just tell by looking at the chart. I don't care about fundamentals. Wall Street will pump the fundamentals. and they'll still fail 75% of the time because they're pumping them at a resistance level that's almost guaranteed for a pullback. So you got to zoom out, and you can really tell when something's way overbought. So I'm going to erase this. I'm going to show you how I find these, and it just take a few seconds. So remember all that. That's what color I have them in right now. And I'm going to go ahead and just simply erase this. So I've got, this is called a Darvis box. This is called a Darvis box, a 3-week Darvis box, maybe a 4-week, 20 days. So that's called a Darvis box. I want to look for my pivot point areas. Now these numbers might not be the same. They'll be off just a couple of cents. So first thing I want to do is try to find a pivot point. And I can see that real clearly. I can see it real clearly. You just kind of go right in here. You got wick, body, wick, pivot point in that channel, body, wick, body, body, body. So that's where I'm seeing the pivot point in the chart. I'm looking for an equilibrium between support and resistance. So I'm going to draw my line, my price line, where I think that pivot point's going to be. Now, like I said, I want to try to find the closest connection to the bodies that I can find in a straight line. I don't care about the wicks. The wicks are a gift of confirmation. People are stuck trading wicks. Only wicks. It makes no sense to me at all. The consistency is in the bodies of the candle. So I've got a pivot point. I've got support, wick, support, body, support, wick, support, body, support, body, support, body, support, body, support. And we've had a pretty solid, you can see all the connections that go across. There's more connected to that line than anything else. I can move it up, or I can move it down, but I'm trying to find an equilibrium. So then I'm going to put a shield around that. I just want to put a little shield around this, then set my alert right above it. So I'm prepared to take this stock if it pulls back and hits that alert. I'm not ready to take it right then. I'm ready to analyze it. I'm ready to analyze the news, the conditions of the market. So I've got my alert in. Now I want to look for support. So we got a double bottom down here. That's a double bottom. So I'm going to put a price line right there. Or I could bring it up and make it a head and shoulders, which is a first strong support. So I'm going to get my price line, and I'm going to call this a two-headed snake. And that's going to be my support level. Then I'm going to take and put that shadow box. I learned this from TrendSpider. Trading with, I used to do videos with TrendSpider. In that area, and then I'm going to set my alert. See where that body is? Where that body is? That's where I'm going to set my alert. Mark at below. Now I'm going to try to find my resistance level. So I know this channel is support channel for a 20-day period, 20-day period. And I know this is my pivot point. Now I'm going to look for the resistance. Resistance, it's not there. Resistance, it's not there. Resistance would be the triple top. Triple top is a bearish pattern for a pullback. So I'm going to run my price line at the resistance level. And I want to get at equilibrium to this pile right in here that hovered around for about 8-9 hours. And then I'm going to put my box in it, my shadow box. Now this is where I could put two supports, two alerts. I can put an alert for resistance to break on the top of that box, and I can just put an alert for resistance to hit. So I'm going to come up here, we're under it, so I'm going to set my alert, mark at or above, not below, but at or above. That means I got to hit it or just break above it, and then my alert will trigger. So I put at or above, and I put resistance to break. And I should be titling all these alerts. So that'll pop up telling me resistance to break. So then I'll get ready to start playing it really. If it breaks it and comes back and hits the support line, I'll be ready to take the trade. And that's about it. That's how to find a pivot point, how to find the resistance, and how to find the support. But the first thing you want to look for is the pivot point when you're charting up. And use different time frames. Use different time frames. For example, now I don't know how this is going to look on the daily, but here on the daily, we have the 200 SMA. So I use moving averages as pivot points. The 200 SMA, the 200 EMA, and the 100 EMA are support levels when you're in the downtrend. Institutional traders trade off them moving averages. They also trade off the 50 SMA. So if we were way above, for example, hey Jim, man, we just hit the 50 SMA, man, I'm all excited. I say, you are? Yeah. So we hit the 50 SMA right here, and she called it out right here. She said, Jim, we hit the 50 SMA. I'd say I consider that as a pivot point because it's held that 50 SMA previous to time. So as long as we stay above the 50 SMA, we're still bullish. Then she finally, we get this rough week, and she pulls back. We've got a lot of volatility because of the war, which I'm not scared about one bit. Many traders are. Many people are. We've had a lot worse times since I've been trading in 22 years. I'm telling you for a fact. So I got a confirmation right here off this previous resistance level to that 63 EMA. So I got excited about that. This is the IWM. And the thing about it, there's another pivot point besides the 50 SMA on here to take this trade. So you got a head and shoulders, left shoulder, right shoulder, came back and touched it, came back and touched it, and we came back and touched it and had that great run. So that's a triple bottom after a head and shoulders. After we had the breakout of the right shoulder twice. Clean. So simple, so clean. Study them chart patterns. Go back and watch some of my videos. You want to become a much better trader? And I've developed a system for dummies because I'm a dummy, and I made it so much easier to understand. You could have some of the smartest bookworms out there trading stocks and they never get it right. But you make it simple and clean, you have it made. So that's a pivot point. That shoulder line on the head and shoulders, once we broke it, now became a pivot point. So you can use the moving averages, or you can use chart patterns to figure out these pivot points. or you can use the connections of the bodies and wicks and try to find the most resilient place to take the trade, knowing that you're still above that pivot point or below that pivot point. So that's it. I just wanted to point out an easy trading strategy, how to chart or how to start charting. Study the pivot point. Years ago, I was in this room and I turned one guy into a billionaire, and I only had to tell him one thing: look for the pivot point in a chart. And so I kept pulling up these trades, and he'd be wanting to take the trade, and he'd be wanting to take the trade, and I say, I think we're going to hit 436 on this stock. Yeah. And he'd jump in the trade because he thought he was at the right spot, but he never figured out where the pivot point was in a chart. So one day, now that evening, he told 3 other people, he said, I can't believe this guy. It right to this penny. I mean, he was within a couple pennies of hitting that reversal, and he called it way in advance. That's because I knew where the pivot point was, I knew where the resistance level was, and I knew where the support level was, and it was real simple. And I just posted it on, and I got a message 2 years later, and he says, Jim, I'm a billionaire. I can't believe it. You taught me how to, you taught me this pivot point, and my trades just came out amazingly better. He was scalping for 5 or 10 cents. Then he began scalping for $1.50, and he was just, because he knew where to look for the resistance levels and the pivot point and the support. So I'm going to get out of here before I get into a rant. Getting into rants here lately because I've got so many bears that just are lost. And this market is not as bad as people think it is. I've seen a lot worse. We had a 30%, 40% correction under Biden, and we had a 50% correction under Obama. Things were a lot worse. We invaded countries, we went to wars. It wasn't that big of a deal as long as you were a Democrat. But when you're a Republican doing it, oh my God. So that's it. I'm going to get out of here. I'm going to get into a rant, and I don't want to do that. My name's Washboardjim. I'm the founder of the Sneaky Snake Trading Strategy, where I talk about chart patterns, moving averages, and being in the now. Have a great day.